Welcome to the Matching Ideas with Resources Networking Podcast, sponsored by GLM Financial, an accounting firm in Schaumburg focusing on providing professional accounting and business services to small and medium-sized companies throughout the Chicagoland area. I'm Tom Ghosh, business strategist with GLM.
I am here with Todd French, who's going to talk a lot about his business and how he might be able to save you some money and some tax dollars and all kinds of stuff. How's it going over there?
Oh, it's going great. How you doing,
Good.
Tom?
Real good. So tell us a little bit specifically what you do and how you do it.
Okay. So we're a specialty tax firm, which means that I don't do taxes or audits. Like that's Tom's group does that stuff. We deal with a specific set of tax incentives within the tax code that deal with accelerating depreciation, so cost segregation. We help with the research and development tax credits. We also help with some of the green energy efficient incentives like the 179D for energy efficient buildings, and then also the 45L, which is for energy efficient residential buildings up to 3 stories. It's a $2,000 per unit credit.
Okay.
That's mainly what we do. We do a few other things, but that's our core.
So you're working with business owners on this and working specifically with their properties.
Yeah, with the properties or if they're businesses. I mean, it's amazing how like anybody that owns a building, whether it's for some sort of investment purposes and they need to accelerate it.
What's step 1 through step 200?
So first thing first is no matter what we do, we got to make sure the numbers work. Because the one thing that I can't do, if the numbers don't pencil out for you, it doesn't make sense, and there's nothing I could say to make that a reality.
How long does that take to figure out if the numbers might work?
Well, typically we're going to ask for some basic information as far as the entity name, what type of transaction it was, like if it was an acquisition or new construction. If it's an acquisition, we ask for some data on the closing. If it's or the depreciation schedule. If it was new construction, we ask for a construction document or a construction cost breakdown. If they've got some documents to give us an idea what the building looks like. And then from there, we can typically run the numbers and we'll put together a benefit estimate that will give us a conservative view of where it's going to land and kind of a high-end view. And we advise clients, because a lot of our clients use our benefit estimates to sometimes, since they've been working with us, they know they can adjust their quarterlies based on that, because they know that no matter what that low end that we say, generally is a really conservative number compared to what we generally turn out.
Okay.
So, and then we offer a fixed fee every time when it comes to that. So they'll know exactly what it's going to cost and basically the minimum benefit they're going to get for that month.
Okay. So then they decide, hey, this is something definitely worth doing. What's the process from there?
Well, typically when we're delivering the benefit estimate, we're also getting enough data for the client as far as the owning entity. And so we deliver the engagement letter as well. So that we're basically all cards on the table. They've got the benefit estimate and they've got the engagement letter. They can read everything about it. If it looks good, they sign it, return it. And at that point, the process starts.
Okay.
Yeah. So it's pretty simplistic. We try to be upfront as much as possible.
Do you have to then visit the location, do any in-person surveys or anything like that with it?
Yeah, I mean, we're an engineer-based cost segregation team, so it's like majority of those particular, majority of projects, yes, there's going to be some sort of site visit involved there. Sometimes, on remote locations where maybe the travel costs are just astronomical, we're still trying to help the client with ROI. So we may figure out alternative solutions to that if there are any, but it's all about making sense. It's like, that's the key to what we're doing so once we're traveling to the site, we'll have an engineer out there, and all these engineers are our employees. We don't contract out that work at all. So it's everything as far as client data and deliverables and work is all done within our internal network. And that's important because not all cost segregation groups actually have their own employees. They contract out with people, kind of like us in our basement,
Yeah. Yeah. So now you've described what it is that you do. The hardest part for me and anybody in my network is how do we recognize that a person needs your services?
So I look at it, if they have the income and they can use deductions, then that's it really. It's like,
Okay.
and obviously there's, in your case, it's like you're going to find that some of your people are passive income, some are active real estate professionals, and there's different ways to handle those deductions. So part of my process is, maybe not everybody, part of my process is I try to push a little bit more to ensure that every one of our clients is asking their accountant or their tax advisor, hey, when I give that benefit estimate, I tell them, if the CPA is not involved in the conversation, I tell them, tell your CPA, if I deliver this number, what does it do for me?
Okay.
That way it's like, there's no surprises. They know that it works or it doesn't work,
Right.
because there's never reason, if it could be a good idea, but if it doesn't make sense for their situation now or ever, then
Right.
it's not a good spend of money, period.
Right. Okay. Oh, those are all good things. So if we have a client that's thinking about purchasing a building, they're just doing the due diligence beforehand, getting it inspected and things like that. Is that a way that you can take a look at it or learn a little bit about it, so that once they buy it, they can then take advantage of what you have to offer?
Yeah, we actually have a good amount of commercial brokers that are referral sources for us. And so a lot of times, as they're looking for, especially in a 1031 exchange situation where you have a short window,
Okay.
a lot of times they're really trying to vet out, when we have 3 properties and they all look very similar, what's the tax difference in something like that? So we'll run our same benefit estimates based on the data we know and give that to them to help kind of comparison shop, per se.
Okay. What's a great way for me to introduce you or introduce your concept to one of my clients?
Well, the way I look at it is a lot of times, it depends. If it's a new prospect, then you're in the discovery phase. So that's part of your normal questioning, I'm sure.
Right.
If it's a long-time client of yours, that's probably the hardest for CPAs or tax advisors to bring up, because they don't want to feel like, hey, if this has been a client for 10 years and they could have done this 10 years ago, why didn't you bring it up then? Well, going back into what I was saying earlier, is the tax code, I think last I heard, is like 3,000 pages is what you folks have to know. The part of it that deals with what we do is about 40 pages. And we only know our 40 pages and maybe a few fringe pages beyond that. Well, you folks deal with so many different scenarios and everything, you can't possibly know everything. And how we generally get referrals from like tax advisors is through CPA or CPE training.
Yeah.
We do training seminars, and you'd be amazed at how many people are discovering research and development tax credits for the first time, even though they've been around since 1981.
Right.
Things like that. It's impossible for you folks to know it all. So the easiest thing is, hey, I just found out about this. Or with it, we've had how many different tax improvements or changes since 2012? 3, right?
Yeah.
3 major ones, and then a few other ones in between. So scenario businesses could change. The tax code could change. Especially the one in 2018 that changed everything that we do and how we operate now. So things that didn't apply 10 years ago could absolutely apply now.
Okay.
And then even stuff that happened 2 weeks ago during the CARES Act, that changed things dramatically as well.
Yeah, definitely. Well, okay. Well, it was great talking with you, Todd. I really appreciate getting this information, even in a short amount of time.
Right.
So thanks again. I appreciate it.
Appreciate it, Tom. Thank you so much.
Thanks for listening to the Matching Ideas with Resources podcast, sponsored by GLM Financial. I'm Tom Ghosh, business strategist with GLM, steering direction, matching ideas with resources.